We're gonna start now, and people can join in if there are any others who are running late. Good evening. This is Jayashree Vakil, President of TiE Austin. Welcome to the April edition of TiE Austin's Shelter in Place webinars. We are delighted that you all have made the time to join us this evening, and I hope that all of you and your families are well, staying safe in these times. As the Austin chapter of TiE Global, we are committed to the organization's goal of fostering entrepreneurship in our community via mentoring, education, networking, incubation, and investment. Given the current situation, obviously we are not able to do in-person events or meetings, but we remain active in trying to help entrepreneurs. So if any of you need any help, consult, mentorship with your business in these times, please do reach out to us. We will surely connect you to the right source within the TiE network, and that's our promise. So today's webinar is just an example of this. Since many of you are not members of TiE Austin, I would take a few seconds to encourage you to join us. A general membership is only at $125 a year, but for those who are attending this webinar, we have special 20% discount, and you will be receiving an email with this discount code that you can use on our website. So I would definitely encourage each one of you to join and become active. And before I turn it over to our moderator for the evening, I would like to introduce this evening's speaker. We are very fortunate, and I take pride in introducing him, to have one of our charter members, Angelos, Angelou. Angelos is a noted economist who is a very well known in Central Texas. For many years, he has been the go-to authority on the economics of the greater Austin area and has spoken, written extensively on the subject. He is the CEO of Angelou-TiE and is the founder and CEO of the International Accelerator in Austin, which provides incubation services to startups whose founders were born outside the United States. Welcome, Angelo. We do appreciate your time today.
Thank you so much.
And today's topic, as you all know, is a very, very timely topic: the impact of the coronavirus on the Austin and Central Texas economy. And with that, I'll turn it over to our moderator, Matt Patton. Welcome, Matt. He is a senior project manager at AngelouEconomics. And Matt, I'll turn it over to you now.
Thank you, Jayashree, and thank you all for attending this webinar tonight. I will be moderating all of the questions that are coming in on the Q&A and the chat screen, and then we will have a Q&A session at the end after Angelos has gone through each of the slides. I'll try to organize them by most common questions and most pressing questions for you all tonight. And so without further ado, I'm going to turn it over to Angelos so we can learn more about what's going on here in Central Texas.
All right, let me share my screen with you. Well, I'm delighted to be speaking to you tonight. I have been forecasting the Austin area economy and Texas economies for the last 36 years. I think I have a pretty good feel of how the economy in Texas and the US performs under ideal situations and not so ideal situations like the one that we're in today. This forecast is going to focus on just Austin and Texas. I'm going to also say a few things about the US economy and how that are being affected by COVID-19. If you have any questions, please feel free to hold them up until the end. We'll have plenty of time for Q&A. A little bit of self-serving ad here. AngelouEconomics has been in business for 26 years, engaged in economic development consulting and corporate site location work, along with doing economic impact studies for a plethora of clients throughout the United States. In economic impact study type of clients, we have over 250 clients right now. Corporate site selection, we've done over $18 billion worth of projects nationally and internationally. And we've developed the economic development strategies for over 600 cities in the US in the last 26 years. You also met with one of my colleagues, Matt Patton, who is driving a lot of our work, particularly as it relates to the economic impact studies that we perform for major corporations, healthcare organizations, for sport events, for events of any type. So we have particular expertise in this particular area. About the International Accelerator, I think it's been described to you well. We were launched 6 years ago as the first accelerator in the US to focus on foreign-born entrepreneurs. We receive about 1,500 applicants a year from around the world, typically 30 countries or so. And we choose 10 to 15 portfolio companies each year to join our program. We take an equity position in the companies. We help them with raising capital, client acquisition, anything that they need done, we make ourselves available to help them out. In fact, many of them stay at my home as my guests so they can save money. And at the same time, it gives us the opportunity to get to know them even better. If any of you are interested in diversifying from your current investments, I would encourage you to take a look at our portfolio companies. We have 15 of them. Some of them are still raising capital, and I will guarantee you they are one of a kind. And I think you'll like what you'll see. Among them, there's at least 2 Indian companies, and 3 more are on their way. But enough about me calling out on AngelouEconomics and International Accelerator ads, if you will. You're here to take a look at what the US economic outlook is amidst the COVID-19, as well as what might be the impacts on Austin and Texas economies. So let's get started. The most recent indicators for the US economy available for March, they're not necessarily good. Retail sales declined in March by 8.7%. We're going to see substantial more declines in April, I think in May. The previous record was a decline of 3.8%, and it was in 2008 amid the recession that we experienced at that time. Particularly clothing and apparel was down 50%, furniture down 27%, actually following the trend in housing starts declines that we've had, which were over 22% so far this year. Restaurant sales fell 26%. I think we're going to see more of that in in April and May, and perhaps through June. Auto sales were down 26%. And the only positive news really were food and beverage sales were up 25%, particularly because a lot of households had been stockpiling food for fear that of the unknown related to the COVID-19. I think that for the most part has subsided, although a lot of supplies are still not yet available in stores. So the economic decline has been pretty significant. I think it's going to get even a bit worse in the couple of months ahead of us. before we can see any particular recovery that might start in June, July timeframe. So industrial production was down by 6.3%, the largest drop since 1946. Manufacturing output was down by 5.4%, led by autos, which a 28% decline. Jobless claims stood at 22 million. And in fact, we've erased all job gains since 2009 in the United States. That number is going to climb probably in the next 2 to 3 weeks before it begins to subside. And bear in mind that typically it is mostly hourly workers that file for unemployment insurance. There could be a lot of professionals who are unemployed that may not file initially, but if this COVID-19 recession prevails for longer than the 3 or 4 months that we anticipate that will continue to go unabated, then you could see that number swell even more. Housing starts were down by 22%, which is the largest drop ever. And the consumer sentiment index from the University of Michigan dropped 18 points in April to 71. And over the last 2 months, the index declined by 30 points, which is the largest increase ever. In fact, it is 50% larger than what the record is. So what is the outlook for the US economy? We are anticipating a GDP decline of about 15% throughout the year. Bear in mind that we've had a little bit of an increase in the first quarter. We're anticipating at least a 20% decline. Some forecasters point out to maybe 30% decline in GDP in the second quarter. And it is going to pick up from June through the end of the year, but albeit slowly, because I don't think consumers are ready to spend. And as you know, the US economy is dependent 2/3 of it on consumption. So while the governments may open up the economy, I don't know that they can force people to open up to spending at pre-coronavirus times. So it's going to take some time. Now we're going to recover quite a bit in 2021, albeit not entirely. A lot of businesses are going to be forced to go into bankruptcy. And therefore, we are probably not going to see a full recovery to pre-pandemic levels, because a good portion of the economy may already be out of business by then. Eventually, new businesses will start replacing old ones that failed, and it may take several years before we are back to where we were pre-pandemic times. So we anticipate a loss of 16 million jobs in 2020 on average, and a gain of 12 million jobs in 2021. The unemployment rate is going to be around 15 to 16% in 2020, and declined to about 6 to 8% in 2021. It all depends on what assumptions you make. The assumptions that we've made here is that the economy will be continuing its decline in April, May, and June, and it will begin to recover in July. And the question is how much of an economic recovery then will ensue. Our model, which I will explain in a minute, basically assumed a 5% improvement in employment per month throughout the year. Retail sales will decline by 25% in 2020 and increase by 15 to 16% in 2021. Again, not a full recovery because people are going to be careful how they spend their money. A lot of them have lost a lot of their money and jobs, and therefore they're not going to be spending as much as they used to. Plus, a good portion of the economy will be out of the equation due to bankruptcy. What is of concern to me, particularly, and in economic times like these, Inflation is not necessarily a bad thing, but deflation is really the enemy. And I think we're going to see asset repricing in real estate, in services, and that will cause deflationary pressures on the US economy, which is possible, not guaranteed, of course, but we're going to see that, particularly in real estate, because there's going to be a substantial decline in vacancy, increase in vacancies, decline in absorption over the course of the next year and a half or two. So let's focus on the COVID-19 impacts on the Austin and Texas economies. So we've run, and by the way, Matt has contributed immensely to this presentation. These are his calculations based on some of the direction that I've given of 40, 60, and 80% unemployment. Now, this was a scenario that we ran just for the leisure, hospitality, and retail sector of the economy. So if we have 40% unemployment in this sector, it will cost us about 100,000 jobs. If we have 60% unemployment, it's about 150,000, and 80% unemployment, it will near almost 200,000 jobs lost. And below is the equivalent of the loss in wages, in personal income in the economy. So none of these scenarios look good. My assumption is that the numbers are going to be around 60%, because the last time I checked, occupancy rates at hotels is dropped to about 10 or 11%. And so pretty close to nothing. I suspect that a lot of people have been furloughed, and they will continue to do so unless there is a significant improvement. The retail sector has been hit pretty hard, as you know, and therefore likely we may lose 60% of the workforce in those two sectors. But not all sectors of the economy are going to have this kind of a decline in employment. There will be declines throughout the economy, with the exception of maybe one or two or three sectors. But predominantly, we're going to see a downturn for Austin, Texas, and the US economies. So if we were at the 40% unemployment in the leisure and hospitality, pre-pandemic times, we had roughly about 200,000 jobs in these sectors. Why is the slide showing 250? It's because we've assumed that there will be basically a 2% increase from last year's averages. So we're at the low point of 150. We lost roughly about 100,000 jobs. And if we assume a 5% recovery every month till the end of the year, we are going to be still at 195,000 jobs. So short again of what otherwise would have been a pre-pandemic recovery. So the question I often ask of my audiences is, if restaurants were open tomorrow, will you be going to restaurants as often as you did before? The way that I would answer that question for myself is, I'm not going to go into any restaurant for the next year until I know that the situation is under control. Moreover, think of what changes restaurants will need to make in terms of reducing the number of tables inside for social distancing purposes. And if you were to reduce the tables by 70% or 75%, then the question is there enough business that you'll be earning to sustain yourself in business if you're only going to have 25 or 30% of the revenues? So a lot of them are going to go out of business. Some significant ones went out of business, which I did not expect, like Northwest by Northwest. in Austin. I suspected that would have been a very profitable operation. The place has been packed every time I went there, but they closed for whatever reasons we don't know. But a lot of the marginal small restaurants are definitely going to go out of business. So when we look at the Austin MSA, and by the way, the slide there should say percentage of Austin economy, not Texas economy. We're looking at the leisure, hospitality, and retail trade accounting for about 22% of Austin's workforce. And when we look at it in terms of wages, because the wages in these sectors are traditionally very low, we're looking at 11% of total personal income in Austin. So just on those two sectors alone, we could lose roughly 22% of the jobs in our economy and 11% of the personal income. When we look at Texas leisure and hospitality, at 40% unemployment, you get about 1.1 million jobs that will be lost. At 60% unemployment, 1.6, and at 80%, almost 2.2 million jobs to be lost, and accordingly 30 billion, 45 billion, and 61 billion loss in personal income in the state of Texas. So if we assume a recovery from a 40% unemployment rate in these two sectors, we're looking at a recovery that by the end of the year will give us about 2,160. It will be way short on average of the activity from last year. So again, not a full recovery. What we also face in Texas is a perfect storm right now, because as you know, we are the largest producer of oil and gas, and with prices now turning negative in Texas, that sector is going to see significant contraction. Already, I've heard 50% or more of the companies involved in oil services and products and fracking are out of business already. So it will impact our banking sector significantly and reduce the output significantly. And a lot of smaller companies, a lot of medium-sized companies, particularly in West Texas, will be hit by this. These sectors of particular importance to the UN is a national security issue. I'm sure prices will go up, but what you have here is not so much as an economic situation, you have a political considerations as well. And every time you mix politics with market pricing of products or services or commodities, you run into trouble. I suspect this is not good for OPEC or Saudi Arabia or Russia or the United States. So hopefully rationale will prevail where there can be more cuts from the announced production cuts of 10 billion barrels per day, because we're going to need to kick it up to 15 or more billion barrels per day cuts in order to have the supply be where demand is today. The longer the coronavirus persists, the longer the lower prices, because demand has fallen off, because people are not getting out of their homes and therefore they're not driving nor are purchasing gasoline. So it is a double hit for Texas, both the coronaviruses as well as the impact that lower prices have on the Texas economy. Now, let me also say that Texas general revenue is dependent only on about 8 to 9% from the oil and gas sector. So Austin is impacted indirectly through government spending because a lot of the government operations are here. The Texas day rainy fund might be helpful here to support the economy, but it will also have to support so many people filing for unemployment, which no state in the country is prepared to really fund the unemployment insurance that is out there provided by states. So it's going to be a significant drop in economic activity in Texas. We're forecasting basically that about 21% of the jobs will be lost, and roughly about 10% of the wages in the state of Texas. The bright spots is that Texas now ranks pretty high among in the top 4 states in the US for venture capital funding. It's been at about $3 billion a year. However, if you're a startup or you seek funding, most of that capital comes to Austin, then Dallas and Houston. So the chances of getting funded are much greater in Austin than either Dallas or Houston. What is important to note here is because of the International Accelerator, I also know that angel funding has dried up. Venture capital funding has also dried up. A lot of people are looking at deals, but they're not making any decisions. And those decisions are going to be made once the dust settles. Whether that will be mid-year, whether that will be at the end of the year, it's probably yet to be determined. When we look at startups per 10,000 residents, Austin ranks pretty high there, besides the Silicon Valley, leading a pack of other cities in the US, as well as cities in Texas. So why do I bring that slide up? Because this is a high-tech economy driven by entrepreneurship. And when the economy does pick up, it's going to have an added push from entrepreneurs in Austin and in Texas. So the likelihood is that the Texas economy, once the oil and gas sector or the COVID-19 problems go away, it's going to have a much better chance of recovery than other states. This has been kind of the case for over 35 years that I've been following the Austin and Texas economies. Another good measure is looking at Austin patents. They are at a record of nearly 4,800 in 2019. I suspect that that might be affected a little bit, but not that much. So it is technology that gives us the impetus for growth. And it is technology, again, that will lead our recovery at some point in time in the future. So let's look at the economic impacts of COVID-19 on the real estate markets. Normally in Austin, we would have about 1.8 million square feet of absorption per year. The same thing, maybe a little bit slightly less on industrial space, and about 900,000 square feet of retail absorption. As you can see, the numbers here are barely on the positive side. We are going to see a contraction in real estate, particularly office, commercial real estate, some in industrial. I've talked to many of my friends that work at JLL and CBRE and other national firms, brokerage firms, and they tell me that particularly in office, 30% of their tenants are looking to renegotiate their leases, to ask for lower rents, as well as to give up maybe close to 30% of their current space. On industrial, it's the same trend, although 12% want to reduce their real estate requirements, but they all also want to renegotiate their leases. Retail is going to be suffering for some time. I don't see any net absorption. It could actually be higher depending on how long this coronavirus is with us. Is it going to be done by June? Are consumers going to feel comfortable in going out there and spending? How many businesses are going to go out of business? All of these are answers that really I don't have right now because data is lagging to about 2 or 3 months. So by the time we'll have this data, the economy may be moving along. So it's really hard to predict what the outcome on the real estate sector is going to be exactly. We do know that it's going to be affected significantly. So occupancy rates are going to decline. When we look at the single family sales market, my pre-corona forecast was roughly about 60,000 or so 65,000 single family starts, or sales rather. Now I've reduced that to 35, particularly because I don't really know in this market how you sell a house. If you cannot walk with your prospective buyer to buy it, to check it out. Visually through, I guess, online video tours, you can do it, but I think people are going to want to see a place before they buy it. So it could happen. We will have some indication the next month or so how well that is going to go. Single family starts was going to be close to 50,000 from before. It's now, I've reduced the forecast to 34 because we're going to see a substantial decrease in housing starts. In fact, this forecast really has very little going on in 2021. A lot of it is home starts are already in progress, along with commercial office market. Those projects are going to continue and they're going to finish. But any new project or planned project has definitely been put on hold. The same thing for multifamily units. We're going to probably have half of those units built than otherwise would have been the case. Austin's population normally increases at a rate of about 55 to 65,000 people per year. I think this year we're going to see only 30,000 people come to Austin because when economic times get tough, people, particularly as it relates to this recession led by COVID-19, people want to stay close to family. They're not going to risk moving around. But rest assured that if the economy is going to start improving, Austin and Texas are typically significant beneficiaries of a new influx of immigration from other parts of the country, because this is probably the best place to find a job when the economy recovers. We're going to see roughly about 45,000 people move to Austin in 2021. When we look at the economic forecast throughout the year, on average, we're seeing 45,000 jobs lost in Austin. It could be higher depending on how long the coronavirus is with us, and only about a 29,000 jobs recovery in 2021. It's going to be a slow recovery. And I would say that when we speak of the retail sector, in this particular sector, you also include the retail stores of Apple Computer. So with unemployment at all times high, with people losing their job, with consumer spending being affected long-term, with a lot of businesses going out of business, I don't know how many people are going to have the appetite of buying a new phone when the old phone works as good. So Apple is going to announce their corporate results at the end of this month. Some forecast 16% decline. Others say maybe as much as 40% decline in iPhone sales. I think in another week's time we will know. And rest assured, along with Apple and Samsung and other companies, you're going to see a significant drop in the revenue of AT&T, Verizon, T-Mobile, and others. You're going to see a substantial decline in semiconductor companies that support the telecom industry. So there's no escaping. Every technology company will be affected from the coronavirus. Texas job creation. I forecast that we're going to lose in Texas about 1.2 million jobs in which have already pretty much occurred, but we're going to see some improvement of those numbers in 2021, where maybe 450,000 jobs will be recovered. Texas population is going to increase by 300,000 people, roughly 230,000 people, maybe 240 when you look at the real numbers in 2020, and roughly about 350,000 people in 2021. A far cry from literally 450,000 people that we had in population growth previously. So what are the key takeaways? And after this slide, I will be more than happy to answer any questions. I think Texas and all Texas metro areas will see significant downturn as a result of COVID-19. In addition, Texas will endure a major bankruptcies in the oil and gas sector. So I would expect a 20% drop in the gross regional product, or in actually the proper acronym here is GSP, the gross state product. Gross regional would be for the MSA, so I need to fix that slide. The global economy was going to grow 4% pre-coronavirus, then the trade war reduced that to about 3% growth, but COVID is further reducing that by 3 to 4% points in the negative. What is interesting is China, South Korea, it appears that Italy and Spain may be stabilizing, maybe even New York. But as far as having the COVID-19 flattening of the curve, but the large segments of the world, whether you're looking at Africa or Latin America or India, have yet not seen the brunt of this. So it has not affected all countries simultaneously. So it's going to continue to linger. Every country is going to be affected, and pretty significantly, I think. God forbid that it becomes a pandemic of out of proportions in India or Africa or Latin America, because simply those countries don't have the healthcare systems to support the recovery of individuals diagnosed with coronavirus. So with world demand being down, it's going to be unlikely that any one of our technology companies that sells products and services overseas is going to see a significant recovery until the coronavirus basically works itself out through most of the important countries around the world. So the question I guess you may ask is, what might be the positive signs? When are we going to know that there's a recovery? And it comes down to a couple of things. One is that there is a cocktail of drugs that might help cure people. And therefore, while that is not going to reduce the spread of the disease, it will reduce the number of people that need hospitalization, and particularly in critical condition. There's a lot of companies that are working on this, both in the US and internationally. Hopefully soon they're going to discover a cocktail of drugs that might perform better than others to really keep a lid on the coronavirus overwhelming our healthcare systems. The cure, however, and better than that, is going to be if we find a vaccine, and vaccine is going to take time. Now, it could take 9 months, could take a year or longer. Usually vaccine development takes a long time, and it has to be reliable. Not all people are helped by vaccines. Some of them are hurt. Some of them may even die, and others will see the benefit. But unless we have a situation where we are either able to classify our people as healthy, minor symptoms, critical condition symptoms, it's going to be rather risky to go back to work. Now, some countries, including the UK, Netherlands, and Sweden, and to some extent Brazil and others, thought that let everyone get infected. Those that die, die. Those that survive, survive. And eventually, with a mutation of the virus, over time, you create immunity, I guess, in your large populations where even if they get the coronavirus, it's going to be a mild case. Well, that only goes so far as when the politicians of those countries get infected and then they change their tune. And we've seen that happen in England. We may see that happen in Netherlands right now, and soon probably in Sweden. This is a pandemic. We don't really have a lot of data to know exactly how it's going to work itself out, how it's going to progress throughout the world, but we do know that people are dying, and nearly 3 million people are infected right now. Maybe actually more people infected, over 4 million people, I want to say. So while I want to be optimistic, and I am typically the most optimistic economist in Austin and the state of Texas, I have to say that there are way too many unknowns. We don't have enough data to really forecast. We cannot go by this past month's drop in GDP or retail sales to predict what is going to happen for the rest of the year in 2021. But the coronavirus is already having a significant impact on our economy that is not to be taken lightly. How perhaps each one of us can help is to be sure that we keep the social distancing rules, we keep safe and healthy, and not contribute to any way to the expansion of this virus among our population. The schools, in my opinion, are going to have to be closed, at least for the second half of this year, until we know how to deal with this, because I just don't know how you can do social distancing in schools yet. That's going to be a tough thing to do. Any questions?
Yes, we've had.
Matt, you can take that over. Yes.
Yes, thank you, Jayshree, and thank you, Angelos, for the presentation. We've had quite a few questions come in. I've tried to group them accordingly. One of the first and probably the most general question, but I think most pressing on a lot of people's minds, but how long do you anticipate before we see a return to normalcy, whatever that new normal might be?
The new normal has to consider a substantial business activity that filed for bankruptcy. So therefore, we may not see pre-pandemic normals. It will be a new normal. So whether that might be 90% of the economy or 85% of the economy is still yet unknown, because it's too early to predict the level of bankruptcies. But definitely there will be quite a few, particularly in the hospitality and retail sector. I think there will be quite a few bankruptcies in the oil and gas sector. And overall, a lot of marginal businesses, service businesses that they're not able to sustain themselves over time, they'll have to also go out of business. The good news is there's a stimulus package that was announced, another one that I think is going to be voted today or tomorrow. But let's be careful that the stimulus going to people, the $1,200 checks, it's hardly a stimulus. Is really allowing people to maybe pay a few bills, not even all of them. It's not like additional spending that you get at a time of normal economic times that you might spend in stuff that otherwise you will not be buying. So it's not really a stimulus. The real stimulus is the Fed and the Treasury have basically merged their balance sheet, and they're providing a back end to loans that commercial banks are making. Even they're willing to buy corporate commercial paper to back it. How much of that is yet uncertain. Now, the Fed said that they may be able to, there's no limit as to what they can buy, but as we all know, there is limits. How soon we expect to have a recovery? I don't expect that there will be significant signs of economic recovery until mid to late June. And definitely we're going to have some recovery in July, but it's going to be slow. And some sectors will recover faster, others will recover slower. So far, the US has tested 4.2 million people, just under that number. It might be a case, and people have talked about it, experts have talked about it, that we have to categorize people that are healthy, those that have mild symptoms, and those that are in critical condition. But that presupposes that we're going to have enough testing to test all of our people, which is not likely to happen this year. And the worst thing is that a lot of people that carry the virus don't even have the symptoms right away. And some of them may not even carry symptoms. So it is hard to predict a time when the economy can get back to business 100% or 85 or 90%. But here we have to evaluate the cost of life, I guess, and what each individual life is worth versus the cost, human cost, that we all endure if we don't have a strong economy. So the economy has to get restarted. The question is when, and when would there be enough safety measures to kickstart it in stages. So I've seen the federal plans. I've seen also the state of Texas plans. They can order through legislation for businesses to open, but they cannot force people to behave. So individual businesses, if they don't want to travel, they are not going to travel. If individual consumers don't want to go to a restaurant or a bar, they are not going to go. So it's going to be a slow process to economic recovery.
Okay, thank you. We have some questions about housing. Do you anticipate real estate rental rates declining and home prices declining? And if there is a decline in home prices, is it going to be at a certain price point? Be looking at maybe homes north of 750,000 are going to be okay, or those below 750 are going to take a bigger hit?
Well, that segment of the market is not a big market for Austin. It may represent maybe 8 or 9 or 10% of the market, if my memory is correct. The bulk of the market is in the medium price range, which is roughly about $400,000. The prices are going to come down. I don't have enough data to know exactly how much. We're going to wait another month when we get some data from the Austin Board of Realtors to see how brokers, residential brokers or commercial brokers are coping now with new home purchases. Inventory levels I think, are not going to go substantially higher because people typically put their homes for sale in Austin only when there is a price point that they want to get. With housing starts being predicted to decline by 25%, the market is going to be way down. Is it going to be anywhere from 10, 12% or 15%? We really don't know at this point in time. I don't have sufficient data to predict. Rental rates, on the commercial sector, we're going to see rental rates decline, definitely. Tenants are asking for those. They're going to also ask for a release of 30% of their space in office than they currently hold. So both prices are going to decline and more office is going to be put into the market. So that doesn't bode well for pricing and occupancy rates. In retail is going to be gruesome. I mean, a lot of retail businesses are going to fail. We don't know yet how much because bankruptcy data is not yet widely available, that we can predict what is going to happen between now and the end of the year. Some businesses early on, they have the propensity to stay on thinking that this may last a month or two, or maybe they have the resources to fund their businesses for 3 months. But if it goes longer than that, they are going to go out of business. So rental rates on the residential side, it's going to be more of an owner by owner situation. A lot of renters that are very pleased with their renters are probably going to drop rent to accommodate some of their good tenants that may be out of a job or are going to go out of a job. But they do want to keep a good tenant. It's going to be harder to lease a new space if you get rid of your tenant. So we're going to see some declines, maybe again 10 to 15%, maybe a little bit more. I don't really have enough data to make that prediction.
Sure. So the next coming in is, what should entrepreneurs in the metro be planning on doing right now?
I would say hunker down. There's not, if you're looking for capital, it's going to be very difficult to get capital from angels or VCs at this point in time. At least not the marginal deals. Maybe some good deals will be funded. Hunker down, develop your go-to-market strategy so that when the market comes back, you are ready to go at it. An entrepreneur never gives up. That's a trait of an entrepreneur. And entrepreneurs typically are knocked down 50 to 100 times. All that they have to do is stand up a 51st time or 101st time. So it's going to be tough. My advice is entrepreneurs want to change the world, and I think they will still be able to do that. We just need to give the economy time to recover.
Sure. I'm seeing a couple of questions come in now. Wanting to know your opinion on interest rates on residential loans. Where do they go from here? And mortgage interest rates, those over the next 12 to 24 months.
The housing market accounts for 16% of total US spending of the economy, you could say. So it's a market that the government, maybe through the next stimulus, and I believe there will be a second and third phase of a stimulus until we're out of the woods. The feds might want to stimulate the housing market. I think rates may drop. I think forgiveness of of loans might occur to some extent, but more so deferment of mortgage payments. Now, as a commercial property owner, I asked my bank if there was a program, and they said, sure, we can defer your payment, your mortgage payment by 3 months. So they will tag it along at the end of my lease, no penalties, nothing. It's just that I will have a longer lease. Now, what happens after 3 months? Would they do it for another 3 months? Potentially, because it's important that the real estate sector does not collapse in its entirety. Businesses that are going to go out of business, the marginal businesses, the oil and gas service companies, those that were dependent on fracking and were on life support for the last 3 or 4 months, they're going to go out of business. The federal government is not going to bail failed businesses. The federal government, however, might intervene to help businesses that will stick around and have the potential to survive. The feds have not limited themselves to how much commercial paper they will buy. They have not differentiated whether it's going to be credit A clients or B or C, but they're there to support corporations get back into business as well as banks. Let's be certain about one thing: there can never be a recovery in the US economy unless we have strong banks. And we've gone through that in 2008. We've gone through that in 2084. 1984. We know about this. So the US government is not going to let the auto industry or Boeing or the airlines go out of business. They're not going to allow for a disastrous situation in the housing market, nor also on the real estate sector.
Okay. I know we're here at 9 o'clock, and our hosts have let us go on for as long as you'd like. Next, Jayshree, please go ahead.
I'm available as long as there are questions.
Yeah, I think it'll depend on Angelos, Matt. We can continue if Angelos is available, of course.
I am available.
Thank you.
Well, thank you. We have a question coming in about what types of impact that the coronavirus is going to have on the economic relationship between Texas and Mexico.
Well, I mean, Trump, I thought was going to announce today, or maybe he's already done it. I haven't been able to watch the news that immigration is going to be closed to the US for the foreseeable future. He wants Americans to find jobs first. In the quarantine situation that we are all in, I'm not so sure that a whole lot of immigration was occurring. This may be more politically driven than it means anything at this point in time. But Mexico is going to be a country that will be significantly impacted, and the confirmed cases are going to shoot up substantially in the next few months because they did not necessarily take measures early on to stop the virus through quarantine measures that other countries have taken, including us, by the way. We lost a month and a half, maybe to 2 months before we took it seriously. So the spread of the virus overwhelmed our healthcare systems in a way that nobody could have predicted it. So the relations between Mexico and the US is going to be tenuous for a while. Whether it is the immigration, whether it is people slipping through the borders to come to the US that might be infected, it's going to be tenuous along with every country in Latin America for that matter.
So kind of piggybacking on kind of the drop off on immigration, I've seen already a few higher institutions of higher education have shuttered their doors. Do you have any thoughts on the impact of higher ed? Are we going to see the enrollments drop meaningfully over the next couple of years, or is there going to be a recovery period?
Well, I mean, if immigration is going to be stopped for a while, and what was not announced is for how long this border closure is going to last, it would affect foreigners coming to the US to study, or maybe even foreign professors to teach at our universities. Ever since 9/11, education has been impacted a lot. More students and professors have gone to other universities, particularly in Europe, to study. But this is affecting Europe even worse than the US. So it's going to be a worldwide problem. So education is definitely going to suffer. The question is, how do you social distance yourself in a school setting, whether it's K through 12 or even whether it's universities? So maybe online education is going to be kind of a norm from now on. The question that I have is learning is a total experience. It's not just watching videos. Videos can only do so much. The interaction among students is also extremely important, and professors. So definitely the world has changed from underneath us in ways that we have never predicted, and certainly not the coronavirus creating that kind of havoc in all aspects of our economy and institutions.
Thanks. And given that, do you see any type of effect on the medical schools and medical research here in Austin and Central Texas?
Well, interestingly, some people had asked me, how is the healthcare sector going to be impacted? And here's my answer to that. Hospitals are empty today. If you go to hospitals, because of the social distancing and the fact that they let everyone else that needed medical care leave the hospitals, are only dealing with coronaviruses. And because of the social distancing and extreme measures among healthcare providers, they're only working now at 20, 30% capacity. The question is, would people, once the situation changes, going to go back to the hospitals to be treated, or are they going to wait, or are the hospitals going to be safe for people with other ailments to go and get treated? I think it's going to take some time. On the other hand, research and development, there are over 100 companies in the US that are trying to develop a vaccine for COVID-19, and there's numerous more that are also trying to, through clinical studies, determine what kind of cocktail of drugs might be possible to provide relief for critical patients suffering from the coronavirus. So while parts of the sector are going to benefit, I think the overall healthcare sector is going to be down.
Thank you. And what's it going to take, in your estimation, to restore? Is it going to be a restoration of confidence in travel for us to see a boost back to Austin's tourism center and the airline sector? Or is it going to have to be a vaccine or some type of therapy?
Well, definitely any new cocktail of therapies, drug therapies that may help get people in critical condition get well, I think is going to provide some consumer confidence. But unless we find a vaccine, I don't think that consumers are going to feel comfortable. A company may ask businesses to start opening up for business. Some of them will do it. Others will be perhaps more nervous and hesitant. So it's an individual decision that has to be made by individual businesses as well as residents. I have a friend in construction, small construction company, and construction was deemed to be a sector that was meant to be critical and therefore essential for continuing operations. But most of he chose to shut it down because his workers refused to go out and be exposed to potentially the coronavirus. So, or they threatened that they would quit. And he would rather shut down for a little bit longer so that he retains his employees rather than lose them and have to rehire and retain new people all over again. So it is an individual decision that is going to be made. And definitely all the companies that go through a staged opening up of their production facilities are going to have to take significant steps. Here is my prediction. If we open up too soon and somehow we have a spike in new cases with coronavirus, we're going to have to shut down the economy again, and that will be devastating. So I think each individual person has to decide for themselves whether it's safe to go out and work, and whether businesses, even though they may be open, would allow freely for people to travel again. I think some people in some sectors may be as productive, perhaps working out of the home, as they would be in the office. So the economy is going to change in ways permanently because of this experience that we've had. And some of those changes might be, again, permanent in the economy. More people working out of homes definitely is a solution for certain types of companies.
Okay, thank you. I believe we're all caught up on questions. Jayshree, did you have any questions that you'd like to pose?
I think we are pretty much caught up, but we have a special, thank you, Pages. We have this special email created for this particular webinar. So if any of you feel that we didn't answer your question, or if you can think of any other questions that you might have, please send those questions to webinars@austin.tie.org, and that's on your screen right now. And we'd be happy to get those sent out to Angelos, and we'll try to answer, or Matt, and we'll try to get those answered for you. So don't hesitate, please do that. And of course, you have all the general inquiries, even if you send it to our Austin, TiE Austin chapter, it's fine, but webinars@austin.tie.org is the perfect email for you to send questions if we didn't answer anything. So I think we are caught up. Angelos, this was very helpful. Somewhat sobering, but hopefully, but that's the reality. So I'm glad that we have, taken some valuable insights, and I hope attendees have taken away some insights as well.
Well,
yes, go ahead.
My response would be, a forecaster always wants to be accurate.
Yes.
In my particular case, in this forecast, I want to be wrong.
Yes, of course. No. Yeah, and we all are in the same boat, but you are amazing, and always enjoy your talking. So thank you, Angelos, and thank you, Matt.
Thank you.
A couple of quick things. Our next TiE Austin webinar will be on May 19th. Avi Kumar will be talking about marketing hacks, and especially digital marketing hacks during these challenging times. So please mark your calendar. We will be posting this webinar, Angelos webinar and presentation, everything, to our website, austin.tie.org. We might have to edit a few things because I think we were getting carried away initially between us panelists, and we were carrying on a conversation. So we may edit that part out, but everything else will be there. But you will also receive an email, all the attendees, all the registrars, we will send you an email confirming all of this that we are talking about. And I do encourage you to sign up as members, and we will send you the discount code as well. And what else? I think that's about it. Thank you. Everybody stay safe.
Thank you so much for the invitation.
Thank
It was
you.
really a pleasure to do this.
We are honored, Angelos. Thank you.
Bye.
All right. Good night. Everybody stay safe.